broadcasting around the world. This is the Hard Asset Money Show. Your wealth, your money, your future. Serious talk about what's happening and how you profit. Hosted by Christian Briggs. Follow him on X at BMC_HAM. Live in 3, 2, 1.
Christian, before we get the Genius Act, I know you want to discuss that one. You've got your concerns. I want to go with the Fed chair and then also the firing of the Fed chair governor, Ms. Cook. But first, your take on rates. Should the Fed chair lower them next month? And should he do multiple decreases by the end of the year? Because some are suggesting, how about a quarter every month through December? So we could see like 2 points by the end of the year. What do you think?
Well, first of all, thanks for having me.
Of course.
Okay, that's a great question. Should he or should he not? If you look at the bond market, let's take a look at really where the emphasis is on interest rates. Can Jerome Powell actually lower the Fed funds rate and then make sure that the stimulation of the easing of credit would become not too much in the economy in too quick of a manner? See, the question you have to ask yourself is, what is the bond market telegraphing to the rest of the world, especially here to the administration? Are interest rates too high or too low? Are they within the balance of what the expectations of inflation are? So here's my take on it. Number one, inflation is running much hotter than what is being reported. When you have a 17 to 20% increase in certain food costs just in the month of July, we had 10% increase in portions of the meat industry. Okay, these are industries that are directly taken every single day. We eat meat or we eat vegetables. We're going to eat one or the other or both. These are reflective of what's happening both in the tariffs as well as ancillary products that are being imported that the tariffs are hitting that are costing a lot more money. So you have to reflect on the inflation that theoretically it is not a tax. It's really more of an inflationary pressure. And I always say short-term gains, short-term pain, long-term gains.
Right.
So it goes back to the question.
And these are short-term because the tariffs aren't going to be in place forever. I mean, you look at what Trump's been doing. The negotiations have worked in almost every nation except Mexico and Canada. And wasn't it just this week where Canada kind of bent the knee and got rid of the tariff for a lot of stuff of ours going up there? So it's working, but it's temporary, right?
Is it temporary? The question you have to ask yourself, these revenues are really addicting. Listen, I've been in DC a long time. I know a lot of the members of Congress, and I've always said this. The revenues doesn't discriminate on party. I've never met a member of Congress that doesn't love a good revenue, whether it's taxation or through tariffs. I don't know if the tariffs are going to be so short term. I think they could be extended a little bit longer than what's anticipated. Because remember, I can make my point here. If you look at the 2018 tariffs that were applied on China, Biden stripped a ton of stuff that Trump had done in that first term. Biden kept the tariffs on that China was paying, or at least we were charging. So it was reflective even to this day. So the tariffs that we're talking to today are actually additional tariffs or costs that are related directly to the importing of products from China. So the question is, will they be long-term? I think some of these will stick, not all of them. And the question is, do we have room to cut? In my opinion, based on the lower half of America, which is really in a recession because their wages are not keeping up, we need to cut by at least 50 basis points. But I think a 25 and a 25, as you said earlier, is what the market might expect, is a very smart move. Cut 25 in September, take a pause, let's see what happens, take another 25 in October if we don't see a massive amount of credit uplift. Because if you get too much credit too quick, you're going to have cars costing $50,000.
Right, then it goes in reverse the other way because they can't pay the stuff off. Right, all right, so let's talk about Ms. Cook. Mortgage fraud. I mean, aren't you supposed to be above? I always look at it this way. If a cop gets busted for breaking the law, shouldn't they know better than you and me? They're a cop. If you're on the board of governors, shouldn't you know better than to be doing mortgage fraud? It's kind of like, Christian, if you're an attorney general for the great state of New York and you bust people for mortgage fraud, don't you think you shouldn't be doing it? Letitia James. Anyway, on Ms. Cook, your thoughts.
Okay, let's talk about that. Now, due process, come on, let's look at this from a due process. Okay, I agree that Trump would not be making the statements he's making if he didn't see that there is some fire to the smoke. So I do believe he has something. I would never want to think that he would ever say or do something that wasn't within the context of what he said above board. And he's got incredible character and integrity. So I don't doubt him at all. The question, though, is it her right to be able to be heard or to at least come up with something against the allegations and show some proof positive? Because anybody, even a cop that might be accused of a crime, has his due process.
Of course.
So my hesitation is, do you remove her?
Right. Where there's smoke, there's fire. Trump's got to see some evidence that we don't see, and he goes, she's guilty as hell of mortgage fraud, and she shouldn't be sitting on the board of governors. We spent so much time there. I don't have a lot left, but I still got to hit the Genius Act because I know you got your reservations. So hit them, pros and cons.
Okay, the pros is it's going to help solidify in the short-term treasury market, really strengthen short-term interest rates like we're already seeing now, because stablecoins have to be backed by one of two things or both. And that's dollars cash, which is obviously easy to figure out. But number two, it's got to be backed by treasuries that have a less expiration date of 93 days or less. So it's going to help in that regard. The only problem that you have is it's still programmable money. It's still built on centralized systems that are ultimately can be controlled. And if the corporations who issue the stable coins with a banking license have any reason to think that an account holder is nefarious or a bad actor in any way, even without due process, they can just turn your money off. So there is some limitations to the privacy because there is going to be surveillance that's built into the bill. Everything that I'm telling you, you can read into the bill for yourself. So the question is, who are the people that are going to be in charge of these? Who are the corporations?
There comes the negative.
Well, what if you're a Republican? Remember what happened to Bank of America?
Down the road, somebody else is in charge of Congress or the White House. They can always shift towards their political enemies. So there's a big con. There's pros there to protect us, but there's also things that could hurt us because who's in charge? It's kind of like the AI debate, Christian. I always say, whoever's building and creating the AI, it could be good or bad for certain people in the nation, because if the person building it is a radical lunatic liberal, then obviously that AI is going to skew towards the way they programmed it. I see what you're saying with that bill. Great discussion, Christian. Let's get you back on more and more. Check out his show, The Hard Asset Money Show. CEO of the Hard Asset Management Group, first time on the program, Christian Briggs. Thank you, brother.
Thank you for having me. I loved it.
Gold has nearly doubled in just 5 years, rising from $1,700 an ounce in 2020 to over $3,300 today. That's a 95% gain, outperforming the market and proving why gold is the ultimate long-term hedge. As global debt soars and currencies weaken, central banks are hoarding gold at record pace. Why aren't you? At Hard Asset Management, we offer award-winning service and fast, secure delivery. Call 844-426-4653 or visit bmcham.com. Protect your future with real assets. Own gold now. Follow on X at BMC_HAM for all news and the latest developments.